The U.S. labor market is in a state of paralysis, and it's leaving both employers and job seekers in a frustrating limbo. But here's where it gets controversial. Is this stagnation a result of economic caution, technological disruption, or something far more complex? Let's dive in. Published on October 27, 2025, 4:42 p.m. IST. The term Great Freeze has emerged to describe the current deadlock in the U.S. labor market. This phenomenon is characterized by a stark imbalance. Companies are firing more workers than they're hiring, leaving job seekers with limited opportunities and employees stuck in career stagnation. And this is the part most people miss. It's not just about layoffs, it's about the broader forces at play, including the rise of AI, immigration restrictions, and economic uncertainty. Recent years have seen dramatic highs and lows in the U.S. labor market. While the economy remains robust, the job market has softened significantly. Layoffs have persisted for nearly a year, and even when companies aren't cutting jobs, they're hesitant to expand their workforce. This has led to a sharp decline in job vacancies and hiring, creating a landscape where career advancement feels like a distant dream for many. Here's a bold interpretation. Companies are clinging to their current employees in a strategy dubbed job hugging. This trend is driven by economic volatility and external threats like tariffs, which have made businesses wary of making bold moves. Nicole Bashad, a labor economist at ZipRecruiter, explains, both employers and job seekers are waiting out the uncertainty. ZipRecruiter's data underscores this shift. Employee turnover has plummeted from 177% in 2023 to just 50% in 2025. In 2025, 30% of employers cited external economic factors as the reason for lower turnover, up from 24% in 2024. Moreover, 76% of companies plan to prioritize retaining their current workforce in the coming year. Interestingly, entry-level positions are expected to see a hiring boost, with 32% of businesses planning to focus on these roles. But here's a counterpoint that might spark debate. While job hugging provides stability, it also stifles growth and innovation. Are companies sacrificing long-term potential for short-term security? Let us know your thoughts in the comments. Looking ahead, experts like Daniel Zhao, chief economist at Glassdoor, predict that the labor market's malaise isn't likely to lift anytime soon. There's no obvious catalyst for a sudden turnaround, he notes. Firms are enjoying stable growth and positive earnings, leaving little incentive to reevaluate their hiring strategies. Jason Draho of UBS Global Wealth Management adds, businesses are still profitable, so there's no urgency to change course. However, there are glimmers of hope. Over 2/3 of companies, 63%, plan to increase hiring in the next year, particularly for entry-level roles that were hardest hit during the slowdown. Nicole Bashad highlights that companies focusing on skills development, employee investment, and technological adaptation will gain a competitive edge as the market evolves. Yet, the numbers tell a sobering story. In August, there were only 7.2 million job openings compared to 7.4 million unemployed individuals, forcing many workers into roles that don't align with their skills or salary expectations. Low turnover also means fewer opportunities for internal advancement, further exacerbating the freeze. Here's a thought-provoking question. As AI continues to reshape industries, will the labor market ever return to its pre-freeze dynamics, or are we witnessing the birth of a new normal? Share your perspective below. Stay informed with the latest U.S. news, covering politics, crime, weather, local events, and sports highlights. For real-time updates on topics like Donald Trump's political moves or global incidents like the Indonesia ferry fire, keep following our coverage.